Welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing well. Had a good weekend, little time away from the charts. We're definitely not lacking for sportsing this weekend. Had the Miami Grand Prix, which was pretty darn good. Panthers are in the playoffs. That was kind of fun. So whatever it is you're doing to unplug for a little while, hope that that has got you ready for another interesting trading week. Speaking of interesting trading week, this week in the markets is now posted in the members area. So for those of you that are this week in the markets subscribers, you can check it out. My Sector Secrets Mastery folks, you also, of course, have access to that with your Mastery membership. And that's going to be in a lot of ways sort of the general game plan for where we're looking and why, as well as a look at the really basic but broad. Look, macro doesn't have to be complicated, gang. In fact, once you start getting into the weeds on macro, it takes you away from trading and into the game of macro, right? Which is fine if that's the goal, right? To just look at macro, talk about macro, and then talk about it some more, fantastic. But at the end of the day, what is the Federal Reserve doing and why? And then anything outside of that, quite frankly, is just unnecessary, to be quite frank. Unless the Federal Reserve is using that data somehow to justify what they're going to say or what they're going to do, the rest of it is just really, interestingly enough, an attempt to front run the Fed. Well, let's talk about how we don't want to front run these markets. Let's get into what's going on in our big three. The big three is the easiest, quickest way to look at three symbols, whether that be intraday, 5 minute, 1 hour, daily, weekly, and just get a good broad view of three main sections, if you will, of quote unquote the markets, right? Indices, treasuries, currencies. Starting it off with the S&P, couple basic things. Where are we, right? You might say, okay, Raghee, where are we compared to what? Where are we in relation to Friday's close? Where are we in relation to key volume levels? Where are we in relation to very broadly followed technical levels? Everything about the S&P is bullish, except for we don't have a trend. I will continue to be rather optimistic and bullish about the S&P until probably we get to closing in on the 4,200 level. All right, so that's going to take us over to the 6E. All right, this is the euro. Why do I look at the euro? Well, really, your two most important central banks are the FOMC and the ECB, the Federal Open Market Committee, and the European Central Bank. And then, of course, anything that Christine Lagarde and company do to move the euro single currency around is going to, on the other side, negative correlation, inverse relationship, move the US dollar. So the dollar can be, by the way, gang, let's take a look at the dollar here for a moment. As the euro heads higher, it is inevitable that the dollar will move lower. So whether you're looking at DX futures, whether you're looking at the UUP ETF, or even the DXY, at the end of the day, euro up, dollar down, or dollar up, euro down. It's always going to be that way because the euro is 58% of this basket of currencies that we call the dollar. But it's never just the dollar. It's a group of currencies versus the dollar. And you can see here, let's stick to the short side of the dollar, long side of the euro. You've got two very different places the FOMC and the ECB are in. The ECB are still very much in that hawkish cycle, while the FOMC, regardless of what Jerome Powell says, is really on the tail end of the tightening cycle here in the States. Okay, the last one. And look, right now, this last symbol can be the long bond, ZB, can be the 10-year, ZN. Now, the 10-year is a little bit more tied to mortgage rates. Long bond is your long end of the yield curve. And then you have ZT. which is your 2-year. Your 2-year is probably the best way to look at, I'd say the 2 years or the 1 year is the best way to look at the Federal Reserve and what those Fed fund futures are indicating. We really need to see something like a ZT go higher to indicate lower yield. So this is still very confused. ZT is not confirming what Fed fund futures are saying. The 2 year is also really good to look at real yield, which is the nominal yield of a bond minus the rate of inflation. So when we look at the treasuries, the interest rates, and whether or not these yields are indicating that the Federal Reserve is almost done and they're going to start to cut later this year, probably November, maybe as early as September, then we should see the ZB, ZN, ZT start to move higher, indicating lower yields. Boom, 3 markets. And you can get a pretty good idea of what's going on in the broader averages. Okay, and you can do this any time of day on any time frame. It's just a really easy way to do it. All right, let's get to it, gang. Let's take a look at your questions as always. All right, first up is, hey there, Danny. How does a person figure out point of control? I use the, so actually let's use the chart we're on right now, Danny. So this is the 2 year. It doesn't matter what the symbol is. This is the 2 year, and where you anchor a volume tool. So I have taught this for a long time. So let me give you the cliff notes. Volume tools are only as good as their anchor. And we know this for every other kind of indicator. We set a period setting, right? Which means study this many candles. So a 200 period simple moving average, or a 12-26-9 MACD, or a 20 period CCI. We are setting, if you want to think about it, an anchor. Study this much data and then give me what it says. Well, volume is no different. But instead of a setting, we give it a date, right? And so in this way, I'm saying from this point forward, tell me what the participation at that volume level has been like. I basically, in this case, anchored it to the first of this year, and you'll see this gray line cutting across. That's visible range volume profile on Trading View. Easy peasy lemon squeezy. And then, so that's point of control, and that you'll see that this is a histogram that moves from left to right. Yes, rather than up and down like a typical volume histogram is, which you will notice is not on any of my charts. I don't use it. It's not for me, for what I do, for my sequence of trading, not helpful. Not useful, right? And so then once I know what the point of control is, which is the most volume, then I'll look at the rest of these peaks. And then I know those are the other volume ledges, right? The king of the volume ledges is the point of control, or the queen, right? And then the remainder are these smaller ledges there. And that's it. That's it. All right. Okay. Next up is, can I please tell us what date you use to anchor a daily volume weighted average price? Linda, if we're looking at an anchored VWAP, right? And it is VWAP. The VWAP should be anchored. I think the most basic, easiest is the first trading day of the year. That's the easiest place to start. And then if you're asking what are additional ones, there's a lot of different ways you can do it. You can base additional anchors, because it doesn't have to be just one VWAP. Just like we may have multiple moving averages on a chart, we could have multiple VWAPs on a chart. And therefore, I think other key dates, aside from the first trading day of the year, could be earnings, FOMC days, things like that, right? So, but the first one I will always recommend is that first trading day of the year. You can even go back 12 months, right? You can say, okay, at the first of every month, I used to do this, but I don't do it as much. But it's a good one to have. I have it on some of my charts here. But you can go back and just at the first of every month, just re-anchor, go back to the first of, so this is May, go back to May of 2022. In June, go back to June of 2022. So you have this 12-month, rolling 12-month anchor. So those are two really basic ways you can do it. All right, next up, Penelope asks, can I tell us again which sectors are more heavily weighted in the S&P and the NASDAQ? Sure. So if I'm looking at the ES, and this would apply to SPY, SPX, even the micro MES, The three most heavily weighted sectors, number one is the XLK, which is tech. Number two is XLF, which is financials. And number three is XLV, which is healthcare. That's the S&P. On the NASDAQ, similar at the first sector weighting level, that's XLK, followed by XLC, and then lastly, XLY. XLC is communications, XLY is consumer discretionary. So you'll see that XLK is unique amongst the sectors because whether it's the Dow, S&P, or NASDAQ, there's a significant amount of weighting in that XLK influence, regardless of the index. Notice I don't mention the Russell. The Russell is not a high concentration weighted index at the stock level, but there is some high concentration weighting at the sector level in the Russell. So then the next consideration is, what are the top two weighted stocks in each one of those sectors? And those are things, Penelope, as you're diving into, what we sort of tongue-in-cheek call the sector secret, high concentration weighting, telling us that a very small number of stocks have broader influence over the sector and then over the broader markets. That is the way the markets work. We do not have equal weighting of stocks in these different sectors and indices. It is high concentration weighted, and that's the not so secret sector secret. And when you can see that, like X-ray vision, all of a sudden market movement makes a whole lot more sense because you can see what engines are pulling the markets in whatever direction. And by the way, we talked about the euro earlier. Euro is no different. The US dollar basket, DXY, UUP, DX futures, that's a high concentration weighted collection of currencies, right? So this is a common theme in the market. And sadly, very few traders look at the market in that way. They're still looking at antiquated views of this balanced type of, tick, trend, the put calls, looking at different indices that are balanced. Don't do it, because that's not how the markets are comprised. That's not how they're made up of. You think about what comprises the markets. It's very few stocks, very few sectors, outsized weighting. Thank you for the question. And yes, I'm very passionate on the topic because once you understand that, gang, the markets make sense. You're Neo and you can see the code in the matrix, right? Okay, Robert asks, can I take a look at Tesla on the daily? Sure. Tesla's still a mess, Robert. When you think about what's holding the NASDAQ back, it's the consumer discretionary sector. Tesla's not the only culprit. Amazon's not been playing along either. Of all of the high concentration weighted sectors and stocks, this sector and those two stocks are still laggards, terrible laggards. And they're either got to do one of two things. And I talk about this in This Week in the Markets, the current issue. Again, out. You can check that out if you're a subscriber or if you are part of the Sector Secrets Mastery. Couple things that could happen with a laggard. Either it plays catch up because a rising tide lifts all boats, or it's going to continue to drag on the NAS. I'm not super fond of what's going on with Tesla because until we get it set up from a near-term floor, it's going to be difficult to manage risk. So what is a floor? A floor is support. Support is buyers. Buyers create demand. So whether you're looking at it from the standpoint of floor, support, buyers, demand, it's all the same thing. Yes? I can't look for buyers yet because buyers are going to be overpowered by sellers as long as the multi-trend, this red row is red. I do not have a potential setup to the long side in Tesla. Not only do I not have it, my indicators tell me I'm simply not allowed yet. So that would be the daily. Now, if we want to change it to, say, an hourly or a 5-minute, those are the other two time frames that I use to trade. I can day trade Tesla, right? I can day trade Tesla to the long side if I'd like. On the 1 hour, I could day trade Tesla to the long side, but only if it trades down to, I've got to see this get down to about 159. Right. So there are different setups as long as I have a time frame for the job. 5-minute for day trading, 1 hour for short-term swings, daily for swings in general. Right. And that's the way that I'll look at it. So right now, As far as a pullback goes to that level, I don't have anything there until about 162, right? 162. Now, if you're looking at a pullback, again, Robert, it's kind of hard to go in sort of mid conversation on trade because I don't know what your trigger was. I am not allowed to get, and I love that you're in puts. So I think our direction is spot on, but our timing is going to be a little different. I'm not allowed to get in a put, Robert, in Tesla until it hits resistance. And I have not yet hit super meaningful resistance as of yet, right? But I like the short side. I like the put side. I don't have this set up yet. All right. And by the way, where would that be? Either at a volume ledge or at the daily price movement range, either on the 1 hour or on the 200 at 170. Actually, where we are opening today could be very interesting, Robert, on the 1 hour. Overbought 200 propulsion neutral environment. I'd keep an eye on 173 in the near term. All right, Srinivasa, good morning. I use your 3-panel charts looking at ES Momo trend yellow, which means neutral, but why is the market going up from 330? Why is a Momo and trend still neutral? Okay, let's take a look. Now remember, just because the markets are going up doesn't mean that we have an uptrend. So an uptrend in the most basic way could be considered a number of candles, and that's going to be up to the individual trader. I like to see 5 to 10, right? 5 on the shorter end of not just up candles, but higher highs and higher lows being the most important part of that. That's the backbone of a trend. I believe we talked about that either in the previous issue of This Week in the Markets or the current. I'm trying to remember which one. Oh, no, you know what, where I talked about that? You know what, Srinivasa, let me direct you to, I just remembered. I'm trying to think, why does that sound so familiar? I'm always writing, gang. I write probably 90 minutes every morning. And so I'm always writing. A lot of it makes its way to members by way of our chats or This Week in the Markets. If you want to check out, so if you head on over to my Twitter, you don't even have to be a member of Twitter to access it. Here it is. Let me send you all the link. There we go. So Srinivasa, check this out. This is trend trading via buy the dip, right? I know a lot of people say, oh, buy the dip doesn't work. Not true. It just means they don't know how to buy the dip. So if you check out, some of you might already be following me on Twitter. Cool. I love Twitter. I'm a huge fan. Probably my favorite of all social media. Followed by YouTube, right? Yeah, check that out. And I talk about what it is that a trend ideally should be. Now we've automated that, obviously with the multi-trend and four moving averages. But unless you get that succession really of higher lows, it's very difficult to get an uptrend. So even though we've been up, generally speaking, this is still, and if you notice, the multi-trend is really quite right. It's still really right. Do I want to be long? Absolutely. But should I treat the market mostly as chop? Absolutely. So you'll see that tactically, the multi-trend is spot on. It's telling us, hey, there's bullish momentum, have bullish bias, be a buyer more so than a short seller. But if we had a green trend, it would indicate that the path of least resistance would include higher highs. And that's simply not happening, right? And that's actually, the multi-trend is correct. What we need to remember is we need a very short window of oversold, overbought. And if that's the way we're trading, respecting what the multi-trend is telling us, we're in good shape. All right. So that's where I have full faith in the multi-trend. All right. Pierre asks, I cannot trade futures. How much of futures trading are you doing in the Sector Secrets Mastery? You know what, Pierre, it's kind of funny. Quick story, and we're going to wrap it up. My mother was born in India, West Bengal, Kolkata. And whenever she goes back to India, all her family and friends says, you're so Americanized. You're so Westernized, right? And when she's here, everyone says, oh, you're so Indian, right? I will tell you, Pierre, when I'm in the mastery, it's just kind of funny. We do both, right? So some people will say, oh my gosh, Rog, you look at so many futures. And then if I'm in the futures room, people say, oh my gosh, Rog, you're only looking at the ETFs. So it is really whatever it is you're looking for. Okay, what do I mean by that? If you're with me in either room, I'm going to talk about the S&P futures because whether you trade them or not, we have to use the setup in the S&P futures to talk about all different iterations of S&P, SPY, SPX. Why? Because the S&P futures are the most complete view of the S&P. So for traders who want to trade the futures, great. MES, micro, ES, mini, you've got it. But then also with my alerts, I'll say, hey, but if the market moves to this level, buy the SPY. Same thing with the NASDAQ, same thing with gold, same thing with bonds, same thing with crude, right? To understand how markets work, we look at the broadest group, right? And that could be currencies or treasuries, that could be indices. We move it down to sectors, we move it down to stocks. So the truth of the matter is, if you are open to, right, finding what you need, okay, Rog's talking about the S&P, but I know I'll get an opportunity to play the SPY, then you're fine. And if you say, Rog, I don't want to trade the SPY, I want to trade the S&P, the information is there. I hope that makes sense, Pierre, because it is a question that comes up a lot. The bottom line is I do it all. I do it all. And that's the way I think we can best position ourselves in the markets according to the risk and the leverage that we want to assume. All right, gang, as always, thank you so much for being a part of Charts and Coffee, Caffeinate and Dominate, gang. We've got a quiet economic calendar today. Enjoy it. It gets busier later on this week. Check out the replay of This Week in the Markets live over at the Simpler Trading YouTube channel. Also, my YouTube channel at RagheeHorner.com. I'll see you tomorrow. Same time, same station.